Hello everyone, this is Arun. Welcome to a new video. So this video is going to be very important because in this video I will discuss a strategy to trade gold, particularly in the Asian session. So many of you have requested me recently that you want a simple mechanical strategy because most of you are beginner here obviously and you do not have time to actually look at the charts at the higher time frame or also trade at the higher time frame. In that case you want to take some scalp trades in session kill zones where there is high volume, high volatility in the market. So for all of you guys, this strategy is perfect if you want to trade gold, particularly in the Asian session. And Asian session is also one of my favorite sessions because it is relatively quiet, because we don't have any kind of high impact news in the Asian session. But the price action is definitely very, very clean. And if you use the strategy, then you can actually make some good profits at the end of the month. But again, I want to tell you something that this is a completely mechanical strategy. That means you don't have to use your brain. There will be certain set of rules that you have to follow word by word and accordingly take your entries, your targets, your stop loss, everything. And that's the reason that this kind of strategies, which are completely mechanical, where you do not really have to make any kind of judgments, those kind of strategies are not very reliable. And this I'm saying from my experience because I myself have given literally days and weeks to backtest this kind of completely mechanical strategies where we don't really need to understand the structure of the market, to understand the bias of the market, to understand where the liquidity lies in the market. We don't really need to see all those things. It is completely mechanical. That means even a 10-year-old kid can use this strategy. And that's the reason this kind of strategies don't really have an edge. Okay, you understand what I'm saying? This kind of strategies don't really have an edge. So I do not really recommend this kind of strategies, but yes, if you do not have time and if you do something else along with trading, or let's say you're just doing trading for part time and you just want to make some quick bucks, in that case, definitely you can use this strategy in gold and you can make some decent profit at the end of the month. But again, if you are a serious trader, if you have actually time to read the market, to watch the charts, in that case, I'll advise you to learn the structure of the market, understand how the market moves, try to figure out what is the bias of the market, where the liquidity pool rise, and all those things, because that will really, really help you to trade not just gold but any kind of market. Okay, so now let's start with this video. So it's a very simple strategy, and I have also made the similar strategy in this channel only I think 5 to 6 months back. And this is the same strategy that I will discuss here also today. And I will show you whether this strategy is still relevant in today's market or not. Okay, so I'll also show you examples for the last week. So make sure you stay till the end of the video because this is going to be very, very insightful for those who really keep hopping strategies from one place to another and they're looking for an ideal strategy to make some profits. So for them, definitely you can focus on this strategy. And also, before investing your own money into this strategy, make sure you backtest the strategy at least for the last 6 months to 1 year so that you can understand how this strategy performs in a longer term. Okay, so now let's talk about the strategy. So this is the Asian session strategy, very simple strategy, and by the name you can understand that you are going to use this strategy only in the Asian session. So first of all, what you have to do is you have to come to the lower bottom of the chart over here where you can see time zone. So here you have to click and you have to select the New York time zone as your official chart timing. Okay, so make sure you click this UCT -4 New York, and once you click it, after that what you will do is obviously you have to know when the Asian session starts in your area. So for that, what you have to do is you have to go to the indicators section, and there are many session indicators that you can find, but the one I use now is called FX market sessions. So this one. So this is the one that I use right now. And if I take you over here in my chart, and if I go to the 1 hour, and after that, if I open this session, you can see over here that I have got the three major session of the day marked, which are Asia session, London session, and New York session. And also we have got the London close. Anyhow, these are the three major sessions of the day: Asian, London, and the New York session. And the settings for this indicator you can see over here. So time zone, you are going to select GMT -4. History, you can select how many bars you want to see this session indicator. After that, the first session is going to the Asian session. Colors, again, you can choose by yourself. I have chosen a relatively cleaner, you can say, background over here. So it is up to you what kind of colors you prefer, and the timing. So this is the most important part. So this is going to be 8 p.m. to 12 a.m. for the Asian session. After that, you'll come down for the session 2, which will be the London session. And again, I've selected the same color over here. This one will be from 2 a.m. to 5 a.m. And by the way, these are all New York timings. So that's the reason we have selected GMT -4 over here as well. And obviously, this is just an Asian session strategy, but here I'm marking out all the three major sessions. So the third one will be the New York session, where you have the timing 7 a.m. to 10 a.m. and after that the London close, which timing is from 10 a.m. to 12 p.m. Okay, so these are all the timings that I have used in this indicator, and after that, once you click OK, you get this kind of markings. As you can see, Asian session, London session, New York, and then London close. Okay, so now that we have got the session timing, so now let's try to understand what is the strategy exactly. So the strategy is actually very simple. Like I said, it's a completely mechanical strategy. So what you have to do is, let's say the Asian session starts over here. Okay, just for an example. So the Asian session starts over here. What you have to do is you have to go to the 15 minutes time frame. Okay, you have to go to the 15 minutes time frame. Okay, 15 minutes time frame, and then you will mark the recent highs and lows in the 15 minutes time frame. So let's say we have got the recent high just before the Asian session starts. So let me mark over here as Asia. Okay, so I'm just marking it as Asia. So before the Asian session starts, we have got this as the high, and we have got this as the low. Okay, so just before the Asian session starts, what we have done is we have gone to the 15 minutes time frame, and there we have marked the high, the recent high, and the recent low. Okay, and now as the Asia session starts, so let's say the price action before the Asia session starts looks something like this. So market came down, created this low, and then market went up, created this high, and then market was somewhere around here, and after that the Asian session started. Okay, so let's say that this is how the price action happened before the Asian session started. So now as the Asian session starts, what you will do is you will wait for market to either take out the high that you have marked or the low that you have marked. Now once that is taken out, what you will do is you will go to the 1 minute time frame. You will go where? You will go to the 1 minute time frame from the 15-minute time frame. And there what you will do is you will look for a clean structure shift along with displacement. What do I mean? So let's say this is the high, right? And now you go to the 1 minute time frame, and market has taken out this high that you have marked. And once market takes out this high, what we want to see something like this. So a high is created, taking out the previous high that we have marked over here, which is this high, and then market comes down. And not just comes down, market actually gives us a structure shift to the downside. So what we have got is a market structure shift, because market created this low, another high to sweep out this liquidity, and then market drops back, breaking below this low along with displacement. That means as market drops down to break below this low, what we want to see here is a fair value gap. So that is very, very important. If fair value gap is not there, then we are not interested. Even if market drops down and breaks below this low, but there is no fair value gap over here, then we are not interested to take a trade. Okay, so fair value gap is must. So once there is fair value gap, and I think you know what is fair value gap. For those of you who don't know, so it's very simple. Let's say we have got one red candle, we have got another red candle, and we have got another red candle. So we've got back to back three red candles, and you can see that the first candle and the third candle, they're not in contact with each other, right? So there is a gap between these two candles, and this is what we call as the fair value gap. That means this gap between the first candle and the third candle will be our fair value gap. Okay, very simple to understand, right? So this is going to be our fair value gap. So that's what we want to see over here as well. So once we have that fair value gap, so what we will do is we will take our entry from the fair value gap. We'll place a limit order over here. Our stop loss will go above the high of the 1 minute time frame, and our target is going to be 1:3. So this is going to be our first target. 1:3 is going to be our first target where we will book our partial. 1:3 is going to be our first target where we will book our partial. And after that, let's say the low that we have marked previously is somewhere around here. In that case, our final target is going to be at this low. Okay, so I hope it is clear. The same thing will happen when the market will come down and it will take out the low first. So now let's say what market does is, let me remove this. Okay. Okay. So let's say that market, so you mark the 15 minutes high and the 15 minutes low before the Asia session starts, right? So let me just mark it as Asia. So you have marked the highs and lows before the session starts. And then market comes down after the Asia session starts and takes out this low. So after taking out this low, what you have to do, you again have to go to the 1 minute time frame. Very simple. You have to go to the 1 minute time frame, and there what you will want to see is a clean structure shift. That means this is the low. So in the 1 minute, what you want to see is something like this. Market is dropping like this, another low to sweep out this low, and then market pushes to the upside along with displacement. That means what you want to see is this last high broken along with fair value gap over here. So this is going to be your confirmation in the lower time frame, and now you can take an entry from this fair value gap. You are going to place a buy limit order from this fair value gap, and your stop loss will go below the low of this 1 minute structure, and your initial target is going to be at 1:3. So this is going to be your initial target at 1:3, and your final target is going to be at this high which you have marked over here. Okay, so I hope that is clear. That's it. It's a very simple strategy to trade gold in the Asian session. And if you can follow the rules that I've shared, specifically the 1 minute structure shift along with fair value gap, that is going to give you a much better win rate. Okay, so make sure that there is always fair value gap whenever there is a structure shift. So this is the simple strategy. Now let's use this strategy for the last week and see how this strategy would have worked. So this is the Asian session, as you can see. So this is the session starting, and let's go to the 15 minutes because that is where we are going to mark out the highs and the lows. So what we will do is we'll mark the recent high and the recent low. You have got this as the recent high, very simple, and you have got this as the recent low, right? Just before the Asian session starts. And then, like I said, what you will do is you will wait for market to take out either the high or the low. So as you can see, Asian session started over here and immediately market came down and took out this low. So now let's go to the 1 minute time frame. So in the 1 minute, if you come over here, then let's see if we get a clean structure shift or not. So in the 1 minute time frame, market actually gave us a clean structure shift, as you can see. But we won't be really interested to take an entry over here. Why? Because there are two reasons. First of all, if you look at the structure over here, then do you have a clean point of interest? We actually don't. You can see that there is no fair value gap over here. There is no massive fair value gap. These are very, very tiny gaps which are not generally considered. And after that, over here also, again, very tiny gap. So again, not generally considered. And here also, we don't have any point of interest. Only after market broke out the last time, we had this massive point of interest, this two fair value gaps. But before that, here we did not really have any convincing fair value gap. So this is the first reason that we are not very interested in this kind of price action. We are not interested to take a trade in this kind of price action. The second thing would be that I don't really like when market, this is again I'm saying from experience, even though market after taking out this low, where should it go? It should go to take out this high, right? Because this is what we have marked. But as you can see, what market did was market has pushed a long way. So here in this case, you can see that we have got this as the high and we have got this as the low, right? Now if I use my Fibonacci from this high to this low, then I can say that market has already moved beyond 50%. So whenever that happens, then I am not interested in this kind of setup. What I want to see is a clean structure shift, something like this. And after that, immediately market should come down, tap into a clean and clear point of interest. And from here, we'd like to make our entry and we're going to target this high. So this is something that I really use in this strategy because it really helps to better my win rate. So you can also keep this in your mind whenever market already trades through 50% of the high and the low that you have drawn. Whenever market trades above 50% of this range, those kind of scenarios, even if there is a point of interest which is being created over here, you can actually ignore this kind of setups, okay? Because market has already pushed a long way up, taking out this liquidities. You can see over here, market is already hunting this liquidities. So you don't know after taking this liquidities whether market will actually drop once again. And that's the reason whenever market moves a long way towards our target, specifically at least 50%, in that case, we try to avoid taking this kind of setups. Okay, so keep that in mind. So this is also something that you understand from experience as you backtest this data. Then only you understand the small nuances and you can modify your strategy for better win rates. Okay. So now let's go to the next day. So next day will be this one. Let's see if this strategy worked or not. So this is the Asian session. And before that, we have to mark the recent highs and the recent lows. So very simple. This is going to be our recent high. You can see over here. Obviously, you can see this as another high, but we're not going to consider this because we are only going to consider the recent high and the recent low. Okay, and this is going to be our low. So this is where the Asian session started, and let's see what market did. So did market actually take out this low? Then no, market did not. Okay, so in that case, market actually went to the upside and took out this high. So after taking out this high, did market actually give any kind of structure shift? So no, after taking out this high, there was no structure shift that happened. Okay, so if that happens, then what you will do is you are going to mark out the next high. Okay, so this is going to be the next high, and here also you can see that market traded through this, there was no rejection. After that, you are going to mark the next high. Okay, so when you have multiple highs and multiple lows, if market trades to the first high, then you are going to mark out the next high and you are going to see if market gives a structure shift in the 1 minute, and there you can make your entry. If not, then you are going to mark out the next high, and from there, if market gives a structure shift, then you can make your entry after market takes out that high and gives a structure shift in the 1 minute. So the concept remains same. Just as market trades to the highs and lows, you have to focus on the next high and on the next lows. That's it. So here what market did was, after market taking out this high, let's see if market gave us a structure shift in the 1 minute. Yes, actually I can see that market has given us a very clean structure shift in the 1 minute time frame. You can see there was a high, a low, another high, and market came down and broke structure. So you can see the structure was broken, but what we want to see POIs. So was there any fair value gap? So yes, there was a fair value gap over here in the 1 minute time frame, which makes this structure shift valid. So in that case, this whole candle is going to be our order block candle, and we can make our entry from this order block candle. Our stop loss will go above the high, and like I said, you can target a mechanical 1:3 as your first target. So did we get 1:3? So yes, we actually got 1:3 over here, as you can see. And one more thing that I would like to tell you is that once market comes down and gives you around 1:1.5, you can move your stop loss to break even to protect the trade so that you do not make any kind of loss in that trade. So once market comes down to 1:1.5, you can just move the stop loss to break even. Specifically, whenever your stop loss is too big, in that case, you can do this kind of thing. You can move your stop loss to break even after 1:1.5. And then you are going to target obviously 1:3. That is going to be a first target. And also, this was the low that we have drawn over here. And 1:3 is obviously below this last low. So you can also book your full target at 1:3. Only if this low that you have drawn would have been somewhere around here, then you could have hold some partial till this low. But since 1:3 is actually below this low that you have drawn, that's the reason that you can book your full target at 1:3. So we've got a winner here over on Monday. So now let's see how the strategy worked for the next day. So this is the Asian session. Let's go to the 15 minutes. So in the 15 minutes is the starting for the Asian session. So you're going to mark out the highs and the lows, very simple. So here you can see that this was the high. Just before the Asian session starts, market greets this high, then this wick, and market closes like this. So this is the high. I'm talking about the low. Then this is the low in the 15 minutes time frame. Mind you, when I talk about highs and lows, I'm talking about swing highs and swing lows. That means, obviously, if you know what are swing highs and swing lows, that means, let's see, we have got a red candle like this. Okay, we've got a red candle like this, and we have got another candle like this. So let's say market drops initially, and then market goes up and closes the body like this, along with a wick on the downside. And after that, we get a green candle like this. So this is a three candle swing, and this is a swing low. Why? Because just on the left of this low, we have got a higher low, and just on the right of this low, we also have got a higher low. Okay, so that's the reason that this is called a three candle swing pattern, and this is a swing low. So whenever I'm saying that let's mark the 15 minutes highs and lows, I'm talking about swing highs and swing lows only. Okay, so keep that in your mind. So don't think that this low is going to be the 15 minutes low. No, it won't, because it is not a swing low. Okay. Also, this low is not going to be our 15-minute low. Why? Because this is also not a swing low. So this is the low that we have, which is the immediate low just before the Asian session starts, which is the swing low. And that's the reason we are going to mark out this low. Now let's go to the 1 minute and see what market did. Did market take out this high just after the Asian session starts? So yes, you can see there is a wick on the upside, right? Market just took the high at the start of the Asian session. Now let's go to the 1 minute time frame. So now in the 1 minute, let's see what happened. Did we get a clean structure shift? So yes, market actually gave us this high, low, another high just after the start of the Asian session, and then market dropped down along with displacement. So what did we have? We had this structure shift over here, and we also had this as the fair value gap. right? So this was our fair value gap. So you could have made your entry from this fair value gap, right? And your stop loss would obviously be at this high. And definitely you need to keep a little bit of room above the high. Don't just keep your stop loss just along with the high, just a little bit up. What I recommend is 10 pips above, at least 10 pips above the last high which market has created. Okay, because there will be a little bit of obviously spread along with it, which will be, I think, 1.5 pips, which is a standard spread in gold for most brokers, obviously not for all, but yeah, 1.5 pips, 1.6 pips, that is how it remains in most brokers. So if you keep 10 pips distance, then that is going to be relatively safe for you. And after that, you are going to target, like I said, mechanically you're going to target 1:3, which you can see market has tapped very, very easily. And also, since 1:3 is below the 15 minutes low that you have marked, so you can book your full profits at 1:3. So this would have been another winner on Tuesday, and you could have gotten another 1:3 very, very easily. So now let's move on to the next day and see if market gave us a winner or not. So let's go to the 15 minutes. And in the 15 minutes, you can see this is where the Asian session started. What is the high? This is the high. And what is the low? This is the low, right? This is the low. So let's see if market actually gave us a 1 minute structure shift over here or not. So if we go to the 1 minute, was there a structure shift? So in the 1 minute time frame, market actually came down, but there was no structure shift over here. And like I said, once again, the structure shift would have been over here. But in that case, I wouldn't be interested even if market gave us any POI, which was actually there this time. We had this fair value gap, which was taken, but below that we had this order block. But since this is the high and market has created this low, in that case, our Fibonacci 50% is already tested. In that case, we are not interested to take a trade. Once market drops, we are not going to take any trade. We are going to leave it. Okay, so keep this in mind. This is very, very important. And I'm telling you, after experience, after backtesting, literally years of data just based on this strategy completely manually. Okay, so this is from my experience. Whenever market already moves 50% without giving an entry, or let's say the market structure shift is just too far, in that case also market can already move 50% or beyond of the range that you have drawn, the highs and the lows. In that case also make sure you ignore the trade setup. So now let's move on to the last day of the week, which is Friday, and see how market actually behaved and whether market gave us a profit or not. So you can see this is where the Asian session started. So what we will do is we will mark out the recent 15-minute low and the recent 15-minute high. So this is the low and this is going to be the high, right? So now we are going to wait for market to take out either the low or the high. So after the Asian session starts, market drops and takes out the low first. So we are going to focus on that. Let's go to the 1 minute chart and see if we have a clean structure shift. So what market did was market came down here, another high, low, another high, but did not break out the last high, another low, another high, and another low. And this time market broke out the last high, which was over here. So here also you can see we have got this fair value gap, but along with that we also have got this breaker block. So not necessarily market will always come down exactly to your fair value gap. Sometimes it can also tap into your breaker block and market can push from there as well. So you could have just taken your entry from here, and especially in the 1 minute time frame, market does not really give a very deeper pullback all the time. So keep that in mind. In the 1 minute time frame, market can just tap into a breaker block and market can push from there as well. So keep that in mind. So you could have made your entry from the breaker block and you could have target 1:3 very easily. This would have been your first target. And like I said, you can hold the rest of your target till the high that you have marked just for the Asian session started. So here also you could have got a winner for the last day of the week, getting back-to-back three winners for this week, which is not bad at all. And let's say even if you are waiting for market to tap into this fair value gap and you missed this entry, still then you actually got two trades this week and you made plus 6R if you're risking just 1% of your account per trade. And that is also not bad at all. 6% returns on just 1 week with this simple mechanical strategy is also amazing. So this is the strategy that I have for you, and I hope that it was helpful. If it was, make sure to like this video and also comment if you want more such strategies in the London session and also in the New York session as well. Make sure to comment down, and also if you're new to my channel, make sure to subscribe. And if you still haven't joined the free Telegram channel yet, then what are you waiting for? Make sure to join this here. I keep updating completely free setups in gold, silver, forex pairs, and also in cryptocurrencies as well. So you can find the link below in the description. That will be it for today. I will see you in the next video. Till then, take care and trade safe.